Hey, everybody, it's Greg Harrelson here with Century 21, the Harrelson Group, of course, in Myrtle Beach, South Carolina, serving the entire Grand Strand. I just wanted to, as usual, I just want to send you another update on what's going on in the industry right now, especially the South Carolina, the Myrtle Beach market. There's been a few good things happen over the last couple of weeks. Number one, you may have heard that interest rates have been coming down. Now, before we get too excited about that, we do anticipate interest rates will come down. They'll bounce back up. We do, anticipate some volatility, but we're keeping our eyes on the 10-year Treasury. We know that as I'm recording this morning, it's around 4.2, and that means the interest rates may come down a little bit more. It's not guaranteed, but it's likely they may come down a little bit more. As a matter of fact, I'm kind of anticipating that interest rates may come down even just below 7, maybe 6.9, somewhere in that range. But I also anticipate that they'll go back up. So I do think they'll bounce around. The significance of me having this conversation with you is when we started seeing them dip a little bit, we can also see that buyer activity started to increase. We started having a better engagement with buyers in our database. We started seeing more traffic on our website. And when talking to the mortgage professionals, we started hearing that they were having an increase in mortgage applications. So there's no doubt about it that a little decrease in interest rate stimulates activity. Now, here's another thought, though. Is if it stimulates activity, you might be thinking, okay, and you should be thinking, well, maybe that'll be good for prices. Maybe prices could bump up a little bit. And that's possible. We don't have a crystal ball, but it is possible. If there's more demand, it's likely the prices go up, not go down. So that's definitely the case. If we just believe in, economics 101, which is supply and demand. But that also means for those of you that have been waiting for interest rates to come down so you could sell your property, because you want to buy another property, but you've been waiting because you wanted interest rates to come down, just understand that you don't want to wait anymore. What you want to do is you need to secure that next property, sell now, secure that next property before the price goes up. Because right now you can secure that next property below full price in most cases. But if interest rates keep creeping down, that next property, you may have to go back to paying over full price, no appraisal contingencies, maybe no home inspection contingencies. And we can see now, after that's happened the last 2 years, we can see now that's problematic for a lot of property owners because they did that. So you don't want to find yourself in that situation. It would be better to go ahead and secure your next property at a fair price, and then just go ahead and refinance. It's just a thought. If you'd like to have more, conversation around how does that really impact your financials, I can share with you. I can kind of walk you through a process to see if that makes sense financially. So just keep that in mind. Before I get off, I do want to share some facts. I've wrote some facts after I did some research in the MLS. Sales prices in November did dip 2.7%. Now, when I say sales prices, we're talking about closed sales, which means those are sales that have been pending for the last 45 days on average. So there was a slight little dip, 2.7%. Just in the month of November, even though there's been a positive, it's been, prices are a little bit up for the entire year. So we just know in the last month, it did dip a little bit. So we got to keep our eyes on that to make sure it's not a trend. Hopefully that was just kind of a little bit of a speed bump in the marketplace. The other thing, though, that I have here is total listings. So this is the total listings on the MLS. It is up 8.6%. So that's noticeable. Okay, they were up by 2% in November, but overall, year to date, they're up 8.6%. So inventory is starting to build a little bit. It's no longer an aggressive seller's market, still technically a seller's market, but it's much more balanced than it has been in the last couple of years. And then, of course, closed sales. Closed sales are pretty flat. Like right now in November, it was 0.7% up, higher. So in November, we had like almost a 1% increase in number of sales, but for the most part, sales are actually like flat or a little bit lower if we look at the entire year, but it's nothing significant. Like there's no crash, no problems that we see. There's volatility in inventory going up and interest rates bouncing back and forth. Sure, there's volatility, but we haven't seen anything that's really said, oh gosh, we're in trouble. we just need to keep our eyes on this stuff. On average, though, I thought this was on average, it's taking 7 showings on a listing to get it sold. So if you take properties that are on the market, like if you were to go on the market and you were to have 0 showings, we know that it takes 7 showings on average to get a sale. So if you got 0 showings, an agent probably needs to make an adjustment on a market from a marketing standpoint. If you're getting 10, 20, 10, 14, 15 showings and you don't have an offer, then there's other adjustments that might need to be made in those scenarios. So the reason why I tell you on average in our marketplace, it takes 7 showings to make a sale, because if you ever do go on the market, you can use that to measure your progress, measure whether or not you're likely to a sale is likely to occur, or whether or not an adjustment is likely needed in order to pick up the momentum to get the showings to eventually get it sold. So, hey, look, there's my update for the month. I hope that is you find that helpful. I just want you to know that, look, I want to be your real estate professional. I'd love to earn your business. So if you need or are interested in buying or selling in the Grand Strand area, please reach out to me. Greg Harrelson, Century 21, the Harrelson Group. You have a wonderful holiday season. Bye, everybody.